This is Eric Muathe with Muathe.com. Let's take a look at why playing breakouts makes a lot of sense, and I'm going to attack that subject from a different point of view, and it is as follows. So we can see here this is US Steel. Now notice this nice uptrend recently right here. Nice uptrend. Now one of the characteristics of this uptrend is the stock had to clear previous highs. For example, we can take this high here. That's a nice breakout on hindsight. There is a weekly closing high there. There's another breakout here. And we also should acknowledge that this was not immediate because there was several weeks of failed breakouts here before finally it managed to break out successfully. And there was a recent swing trade here for another fresh breakout. So we can see, even from this generic point of view, that the breakout method helps you capture the upside action. Now you'll notice, unlike this period where we have this multi-year downtrend, this being a 2-year weekly chart, we can see, so let's change colors. Every time we try to clear these areas here, prices would reverse. Failed breakouts. So one of the reasons why playing breakouts also makes sense is because you don't know, sometimes it might not be easy to explain why there is a resistance and why prices are not moving higher. For example, let me explain this. In the most recent couple of weeks, we've seen this stock reverse and still continues to point down on a weekly chart. If you take a look at this from a monthly point of view, we can see that the stock is down for the month, down about 7.5%. Even the RSI is turning down. Now, you might not understand off the bat why it is pulling back. And in fact, it's pulling back off the highs of January around 25. So we've seen a big correction off the highs and now pointing down. The best thing to do is to wait for the next breakout. And again, the reason is you might not understand why the stock is pulling back, but some of the times the weekly and the monthly charts can explain why. In this example, we can see, if you take this breakpoint of the RSI here, the breakpoint that took place right there, which is off this level here, and this is in the middle of 2018, before we get this multi-year sell-off. Now I want to show you that this break, if you use my uniformity method, is being confirmed in 2021 here as resistance. So this could be the reason why prices are not moving higher, but you can see that on the smaller time frames. In fact, let's go out and take a look at a longer monthly chart. Notice from this all data monthly chart going back to the early 90s, if I draw a simple single RSI line connecting the highs from early 08, we get a line as such. And of course, what I'm getting at here is that this is also another reason why the stock could be reversing, if not the reason. So playing a breakout makes sense because you'd need the RSI to clear this obvious multi-year resistance line, and that's going to need a fresh price breakout so that the RSI can clear this line of resistance. And as I was explaining, if you take a look at this breakpoint here, the breakpoint of early 2018 highs, then we can draw the uniformity line again this way, And you can see both lines are making contact with where the RSI is pulling back this month. So take a look at this period here in the 90s. You can see how repeated resistance kept the stock down, kept it down here, kept it down here. But notice you need a breakout, which is shown here. This massive clearance of that resistance line is this period. And of course, we can see how it led eventually to a successful multi-year breakout. Now, not to mention that this area right here met the minimum requirements of the ultimate Muathe breakout. So again, we go back to the same point I'm trying to make here, or the same point I am making. Playing breakouts makes more sense because you skip all this sideways, nowhere action, skip all of this, multi-year. This took about 9-10 years in the making, and the breakout strategy gets you into a name just when it is starting to show life. I mean, just right there. And in fact, if we go back and take a look at that breakout in 03, this is important because this plays out all the time, So we need to understand this. If we take these highs right here in 03, we can see the RSI was moving to 3-year high, right? There's no debate about that. 3-year highs right there. And now we're talking, let me highlight that period so we can understand what we are looking at here. It's this period right here when things changed. Notice your MACDs moving to 3-year highs. Again, 3-year highs. And take a look at the other MACD. Remember, we need only one of the MACDs to meet this requirement. Here we have both MACD settings, 3-year highs. Now, this is not speculation, it's a fact. And I don't know how many times I've shown you this, or I'm going to keep showing you this. This, guys, is the money setup. Right there. Right there. Avoid all of this. Multi-year, multiple years, almost 10 years of nothing, and you want to own the most successful period. I've given you the method right there in 03, and all systems running. And that's why I'm saying even in the current market, we got 2 resistance lines. Number 1, the uniformity resistance line, another powerful method, and we have the top side resistance line. What I'm saying is the breakout game makes more sense. The next breakout above these 2 lines is more meaningful. You'd need a price breakout at the same time. You'd need the stock to meet the minimum requirements of the ultimate Muathe breakout. Otherwise, it's going nowhere. This is a minimum requirement. You know that. I keep repeating that over the last 20 years. Now, the risk of owning the stock, the risk is it might go into a multi-month, multi-year sideways to down market. We don't know. And that's the risk. So there's a lot on these charts that sometimes they're hard to see, but it makes more sense to play the breakout game. Oh, and by the way, just to emphasize the uniformity concept, here's a break in 2008. Let's take that break point, draw our uniformity resistance line. Anytime we have uniform action rejection, it's a sell signal. It takes a couple of months to play out, but that's a powerful sell signal. As I said, these methods I'm discussing here and discuss on my channel are time tested. Resistance here, another sell signal there, uniform activity above the line, back below it, another sell signal. Uniform activity above the line, back below it, another sell signal. Oh, and by the way, it just so happens to conveniently, this blue line happens to be around the RSI. Yep, you guessed it, 61.8. And I'm talking about this line right here. Guys, technical analysis is powerful if you know what you're looking for. Or if you know what you're looking for. So we can see from this long-term monthly chart why the stock is pulling back on the monthly and why it is pulling back on the weekly. Now it all makes sense. And we also know the risk of owning is that it could go into a sideways nothingness. If it's going to be an explosive instrument that's going to trade in the 30s, the 40s, the 50s, the 60s in the coming weeks and months, it has to clear the recent monthly and weekly closing highs first. Hence, the breakout concept makes most sense. In other words, this instrument cannot trade in the 30s, in the 40s, or in the 50s before first and foremost moving above the recent weekly closing high, or before first and foremost moving above the recent monthly closing high. It has to clear all these monthly, weekly closing highs first and foremost before it can see 30s, 40s, 50s and above. So why mess with it when it's consolidating and you don't know that it's going to be weeks, days, months or years trading sideways to down, when you can actually take the other side of this, which is, okay, I'm out for now until I see a fresh, powerful breakout that meets the minimum requirements of the ultimate Muathe breakout. Folks, this is Eric Muathe with Muathe.com. Love light, light love. Namaste. Mwah.